First one, this is a slide which we put every time. Kattradu kaimannalavu, kalladadu ulagalavu. So persons who are not knowing Tamil, see, whatever we know is only a handful, and then there are a lot to learn which is equivalent to the size of the world. So that is what that our old Tamil poet Aware has said. So following that, what we are giving our opinion, or it's what we have learned very, very small. There could be a lot of things that has to be learned by us. But in spite of that, we are giving some of our views to bring it to the knowledge of our viewers who are showing their continuous support to our webinars every week. First one is, there is a press release. See, the entire today's presentation is based on this press release only. At the end of each and every GST Council meeting, they give a press release. See, the press release is a abridged form on the recommendations of the GST Council. Okay, now you will be aware of the fact GST Council is the ultimate authority or ultimate decision-making authority in implementation of the GST law. Even the finance minister, though she is heading the Ministry of Finance, she cannot take any independent decision with regard to GST. Only the collective body constituted as per the Constitution only can take the decision with regard to the GST related issues. Because in all the notifications, we will find on the recommendations of the Council. So, Council is the supermost or superior body with regard to GST implementation or changes in the law. So, on a suo motu, even though Madam is the finance minister, she cannot pass a independent legislation. So, the Council has to approve it. So, the Council is the ultimate authority. So, at the end of this, a press release is given. This press release does not have any binding values. Binding values it does not have. But it makes us to prepare, or it enables us to prepare the groundwork for the changes that are going to come. So in a way, it is better than the excise regime, I would say. In excise regime, so usually the budget is presented on first. So the prior day itself, they will say, you do not remove the goods. There will be restrictions. You do not remove the goods, because that one day revenue that will be lost. Suppose there is going to be an increase in the rate of goods. So the government will be losing that one day revenue. So they will say, do not remove the goods on that day. So these are all the issues that we have been facing. But now we are getting what transpired in the council meeting, and then it is given in the form of a press release. But I would say this press release does not have any legal validity. On the basis of the press release, you cannot argue a case. You cannot take the case to the appellate authority or adjudication authority. Sir, this is what the press release meant. So I was thinking that press release is favorable to me. So I took this view. You cannot do that. You cannot do that. So let us be very, very clear. It has got some clarificatory value, but it is not a binding or binding in the nature. So with this release, let us go into the press release, and then on the basis of this press release only, today's webinar is planned. First one is, see, sectors. It has affected many sectors. Okay, manufacturers, landlords, corporate rental of immovable property, restaurants, premium hotels, composition dealers. So agriculture goods, food products, banks, NBFC. So special economic zones, redeemable vouchers, e-commerce operators, late filers, ISD. So these are all the various sectors it has amended. I expect a flood of notifications and circulars after this GST Council meeting. So only after going through these circulars and the notification or amendment in law, we can clearly form an opinion. But whatever the thing that is happening or whatever this is proposed, we have some background information. On that background information only, background information means not the information that we get it from the backside. So we know what is the reason for this amendment they propose. So on that basis only, this today's presentation is going to take place. First one is retrospective amendment of section 17.5. 17.5, all of you will be aware of the fact it deals with the block credit. What are the items for which you cannot take block credit? In that block credit, there was a dispute with regard to ITC for immovable properties. Sorry, ITC for the works contract services. All those things are a matter of dispute between the department and the taxpayer. So you will be aware of the fact, Safari Retreats case, it was Orissa High Court decision. The decision of Orissa High Court was in favor of the appellant, that is a registered taxpayer. So against the decision, the department immediately went to the Supreme Court. Okay. So the dispute was with regard to the use of the word. See, there is a definition for plant and machinery. And in one section, that is 17.5D, it uses the word plant or machinery. So the clear dispute was whether the definition given for plant and machinery covers plant or machinery. The Supreme Court went on a 68-part judgment. It was a very, very beautiful judgment. Okay. Drafted by the judges in a very clear manner. They found out the difference. That is, plant and machinery does not equate with plant or machinery. They emphasize the word or. So there is a different connotation. So they thought, so if it is a plant, then even though it is a building, it should be given ITC. That was in short the decision of the Supreme Court. Supreme Court but did not give that decision. It again sent back the matter to the Orissa High Court to see whether it satisfies the conditions of the plant. So that is the matter stands as it is. But government does not want to leave it like that. Government is not willing to give the ITC for any type of building. So that is in short. So what they have said, they are going to retrospectively amend section 17.5D. Section 17, subsection 5, clause D, that they are going to amend retrospectively from the date of introduction of the GST. That is, they will be aligning plant or machinery along with the definition plant and machinery. So that is going to is the intention of the GST Council. So if they know pretty well, the government has filed an appeal before the Supreme Court. So Supreme Court also, it was pointed out, it is a printing error, typographical error. But the judges told, if it is the printing error, typographical, would the government allowed it for the 7 years with the same? So government from the Orissa High Court decision itself, they are pretty well aware of the fact there is a lacuna in that area. That time itself, they should have rectified that error. If they had rectified that error, so much of man-hours would not have been wasted. See, the Supreme Court time is also very, very precious. They wasted that one. And also, even case of the Zentax talks, we had, I think, 2 webinars on this topic. So we have been detailed discussion. Arvind took a webinar, details of the Safari Retreats case, how it was there, why all those discussions would have been avoided had the government acted earlier than this at this time. Okay, so in future there is not going to be any practical utility of Safari Retreats decision due to this amendment by the proposed amendment by the government. So the law has to be amended with this regard. So that cannot be done by notification. So they have to pass the law in the parliament, then only it will come into effect. But it will come into effect from retrospective date. So rent paid to unregistered person. So that was a very, very contentious issues. So that was become even I would say it became a political battle. Instead of being a tax battle, it became a political battle. So some of the political parties called for a bandh, asked for the shutdown of the shops, or everything were done because they resisted this attempt to tax on the RCM basis for the rent paid to unregistered persons. Why that was there was a lot of agitation because they felt it is unnecessary. That is the thing. But government is not intending to give up. One of the grounds is, see, composition dealers, they paid the tax on the turnover. on the turnover. This composition scheme is applicable to the person up to 1.5 crores. So they need not come on the regular route. That is at the rate prescribed, they need not pay. Only this amount they can pay. But there is an obligation on these composition dealers also to pay the tax on reverse charge basis. Though they pay on the outward supply on the percentage, 1%, they have to pay on the reverse charge basis at the rate prescribed. Okay. Suppose the composition dealer is paying a rent to an unregistered person, then he has to pay on the reverse charge at 18%. And also for composition dealers, the ITC cannot be taken. So that was the main contentious issue. So now, but others, if they are going to pay the tax, then they can take the ITC and then adjust that in the ITC. So there will not be any cash outflow for them persons who are paying the tax. Okay. In that situation, to assuage the feelings of the general public or the traders, they have mitigated this effect to the lesser. Only for the composition dealers, they have proposed that they need not pay GST on RCM basis for the rent paid to the unregistered persons. So if the rent is paid to an unregistered person by a composition dealer, they need not pay GST. That is the issue that is taken by the, and that is going to be a proposed amendment to this reverse charge notification. Okay. But there are also other persons to whom this ITC will not be eligible. For example, if there is a trader in rice, so rice up to 25 kg is only liable for GST. But if a person is dealing in only gunny bags or wholesale, then they will not be paying any GST. Suppose he has taken a premises on rent, for that he has to pay the tax on reverse charge basis, and also he cannot offset that. He cannot offset that because he is dealing in exempt tax. And then another area of concern is with regard to hotels. Okay, hotels now they have to pay flat rate of 5%. So 5% tax. Suppose we go to Annapurna, everyone knows about the Annapurna controversy. Suppose if you go to Annapurna for food items, they will be charging only 5%. But subject to this condition that they cannot take the ITC. So, but this reverse charge mechanism will affect them. So how their government has dealt for them, they have said, now the hotels will have an option to pay an 18% and they can take the ITC. So there, now they cannot express their ill feelings. Oh, we cannot take the ITC. Now you are giving an option to pay 18% and take ITC, or you continue with the regular 5% without ITC. That is an option given to the hotels also. So this is with regard to the reverse charge mechanism for the rent paid to the unregistered person. A little relief, a small relief only to the composition dealer, not to the others. So now GST on sale of old and used vehicles. Okay. Now how the sale of used vehicle is taxed. First, we have to understand. So there is a car for which you cannot take the ITC unless you are in the business of renting or in a driving school. Some exceptional situation. But we are taking a situation, normal situation. For car purchase, ITC is not allowed. Okay. In that situation, if a person is selling that car after using it for 5 years or 6 years, if he is going to sell that car, how the tax has to be paid under the GST? That is a question. For that, government has given a notification, that is 8/2018 CTR, that is Central Tax Rate Notification. So in that notification, they say the tax has to be paid only on the margin. Only on the margin, the tax has to be paid, not on the full sale value. So what is the margin? So margin, they say, is the difference between the sale value reduced by the WDV calculated as per Income Tax Act. So as per the Income Tax Act, suppose your WDV is 4 lakhs and then you have sold that vehicle for 5 lakhs, you have to pay tax only on that excess amount of 1 lakh. The otherwise, If the WDV value is 4 lakhs and then you have sold it only for 3 lakhs, you will get a negative figure. On that, you need not pay any GST. So this is only called tax on margin. So for this notification not only specifies the method of calculating the margin, it also specifies the rate of tax to be charged. So as per notification, what is the rate to be charged? So this notification, in short, if it is a sedan, there are two types of vehicles, hatchback and then sedan. So sedan, hatchback is having a length up to 400 mm. So only you will be finding, that is Maruti hatchbacks and everything will be up to 3,995 mm. So if it is more than 3,995, more than 4,000, it will be sedan. So they put a value, petrol car, and also they have combined with the CC. So if it is a petrol car 1200 cc, more than 4,000 mm, and then diesel car, there is a typographical error. It should be diesel car with more than 1500 cc. So diesel car, sedan, but the cc should be more than 1500. Then other SUV with 1500. SUV, they are not specified about the length of the car, vehicle and all. If it is a SUV, then the rate of tax is 18%. All other vehicles, you have to pay 12% on the margin. As I mentioned in that example, you have sold it for 4 lakhs, the WDV is 3 lakhs and the margin 1 lakh. If it is a Maruti Swift, then it is a it is less than 4,000 mm. So you have to pay on that 1 lakh 12%. Suppose it is a higher end car, say Maruti, there is a car called Ciaz. It is more than 4,000 mm. For that difference, you have to pay 18%. So it was creating a confusion. So whenever there is a sale, they have to look into the fact whether it is 12% or 18%, what is the item sold. So in order to get away all those things, see, government wants more. Government always wants more. That is a thing. So instead of reducing and making the uniform 12% for all the vehicles, they made it 18% for all the vehicles. See, they could have done. So for all the used cars, see, why used car? Already there is the government has got the 28% tax at the time of sale. Again, in case of the sale, why do they want money? They could have reduced it to 12%, but they want more. So they brought it into 18% bracket. Now this 18% bracket will apply for all kinds of used vehicle, irrespective of their length or CC, including EVs have been brought under this 18% slab. So this is one of the amendment with regard to proposed amendment, I would say, a proposed amendment, because this notification has to be amended. This notification 8/2018 has to be amended to bring this uniformity in the rate of tax for all kinds of used vehicles on the margin. So amendment to pre-packaged and labeled. See, there is a definition. See, for the pre-packaged and labeled commodities, there is a tax. See, they give exemption for these goods, but if it is definition, if it satisfies the definition of pre-packaged and label, then tax will be attracted. For example, நம்ம அந்த காலத்துல ஒரு பாட்டி பால் வாங்கி உர ஊத்தி தயிர் வித்தாங்க. அந்த மாதிரி பாட்டி வெறும் தயிரை மட்டும் வித்தாங்கன்னா there is no GST. But if a company does the same and then it packs it and then it sells, it will attract GST. So that is one thing, pre-packaged and then label. So this is made applicable only for selected commodities. Example, rice, curd, even rice. So there was a condition, it should be more than 25 kgs, it is exempt. Less than 25 kgs, because only less than 25 kgs is covered under Legal Metrology Act. More than 25 kg is not covered by Legal Metrology Act. So only for the selected commodities now it has been included. What are the proposal? This is the present situation. What is the proposal? Now this is the thing extracted from the press release. So these are all the words extracted to amend definition of pre-packaged and label to cover all commodities that are intended for retail sale and containing not more than 25 kgs or 20 liter. So this condition, not more than 25 kgs or 25 liters, as per the Legal Metrology Act, stands as it is. But now they are going to cover all the commodities. Now only they specify the commodities, these commodities, that commodities. So this may not, now they are going to say it is going to be for all commodities. So we have to wait and then watch how this amendment is going to happen. Because now if you go to Paramudir, now you will find that is corn, okay, not fried corn or anything, baked corn or anything, just plain corn. Now you have to bring it to the home and then you have to boil it, then only you can eat it. But this corn is packed and then with a label and then symbol and the name, it is there. So we have to, now it is coming under the vegetables, it will not be taxable. In future, we have to wait and see how it is going to change. So because they propose, the definition is going to change to make it inclusive for all the commodities. So even vegetables, suppose vegetables, if they are going to put it in the plastic pack and then with a name and then the outlet name with the pre-packaged quantity, it may attract GST, but we have to wait how the definition is going to be changed. So if there is going to change, then it will attract the GST. So again, this is one of the issue. I would say this is very much needed. This is very much needed, I will tell. Why? See, banks levy penal charges. When bank levies penal charges, suppose you make some defaults, you are not able to pay that loan stipulated, they will levy penal interest. Okay, regular interest say 10%, they will say additional interest, penal interest 2%. The department is taking penal interest is not the normal interest, it is equivalent to penalty. So you have to pay, the banks have been asked to pay GST on the penal interest collected by them. So there was a question whether is it a supply or anything, whether it will come under the exempt category. Because it is penal, will it change the color? So for that, now it has been clarified that no GST is payable on the penal charges levied and collected by banks, NBFCs from borrowers. So if penal charges is going to be collected, then it will not be liable for GST. It is already the borrower is in distress because he is not able to repay the loan according to the terms and conditions imposed by the banks. For that, he is penalized by the banks or the NBFCs. In addition to that, if a government is going to levy GST, it is a double whammy for the borrower. So they have given a clarification. No GST will be payable on penal charges. I would say it is a welcome move. It is a much required move. It will give some relief to the person who are not able to pay the loans as per the stipulations. Yeah. Conditions. Section 16(2) stipulates some of the conditions for taking the ITC. So although you are entitled to take the ITC, which is used for the furtherance of the or in the course of the business, but conditions are imposed by section 16(2). One of the condition is you must have a valid tax invoice, you should have received the goods or services, and then the person has filed his GSTR 1, it is getting populated in GSTR 2B, you must have filed a valid return. These are some of the conditions which are specified in section 16(2). One of the condition is the recipient should have received the goods or services according to section 16(2)(b). So this is a condition which is imposed. But this condition is literally interpreted by the department officials. What they say, they should have actually, it should have come into his premises. Then only it will be eligible. So this type of strict interpretation is taken. And also, sometimes the goods are taken delivery at the factory gate by the recipient. So, okay, from here I will carry, because the recipient may find a person who is willing to transport the goods at the lower rate. So he will take these goods on his own behalf and then he will transport. In that case, the department takes the view that goods have not been received by the recipient and they deny the ITC. On the ground, it is not received. So for this, a welcome amendment has come. So the GST Council, see what I have given in italics. What I have given in italics is the taken from the GST press release. Clarify X works contract where goods are delivered by the supplier to the recipient or transporter at the supplier's place of business. So that is what I meant, factory gate. At the supplier, and property in goods transfers to the recipient at that point. Goods are considered to be received. Deemed, there is a deemed receipt. So already there is a concept called deemed receipt, but now it is going to be further clarified by the amendment, considered to be received by the recipient under section 16(2)(b). So even if the recipient takes the goods at the factory gate and the risks after that is going to be with the recipient, he can take the ITC, and this will be considered as the satisfaction of conditions stipulated under section 16 subsection 2 clause B. So for this purpose, they are going to issue a circular. Hope this is a beneficial amendment. We expect the circular to come soon. Yeah. Then now everyone is in the 9(9)(c) season. So 9(9)(c) season. So this is a welcome amendment, I would say. 9 GSTR 9, you know, it is an annual return filed under section 44. Okay. 9C is a self-certified reconciliation statement. In 9C, you reconcile the turnover that you are given as per your financial statement with the documents GSTR 3B or filed with the department. A reconciliation statement has to be filed. That is 9C. So 9C, you will be aware of the fact it is applicable for the person having an aggregate annual turnover more than 5 crores. Now the question arises with regard to 9C late fee. Whether there should be a separate late fee for 9 and then there should be a separate late fee for 9C. So this was the contention. The counsels like us were arguing 9C is not at all a return. It is a reconciliation statement. So what 47 talks about is only return, but 9C is not a return. So there could not be any separate penalty or separate late fee for delay in filing the 9C. That was the argument advanced by the counsels or the tax consultants by like us. So the matter went to the court. So ultimately matter also went to the court. So the in the case Kerala High Court, it came before in the case of Anisha Chandrakant, it is one of the decision relied on or which was beneficial to the assessee. So I have extracted, it is not in dispute that GST portal does not support payment of late fee for 9C. So these are all the observations made by the honorable judges of the High Court of Kerala in para number 24. Okay, para number 24 of this judgment. Anisha Chandrakant. So Anisha Chandrakant, they told it is even the portal does not allow separate late fee filing fee for 9C. So then annual return GSTR 9 filed without GST may be deficient, attracting general penalty. Late fee cannot be made applicable for regularizing GSTR 9 by 9C. In this case, what had happened? No. See, he had filed the GSTR 9, but 9C has filed belatedly. The officer, that audit officer, wanted the late fee for 9C till he has filed the 9C. So that was an argument, but the judgment went in favor of the registered taxable person. Will the government keep quiet? No. Government does not want this to happen. So they propose an amendment. So they say till the 9C is filed, your late fee will arise. So that is the stand of the government. So as government, that Kerala High Court has said, it will be considered as a deficient, attracting the general penalty. But now they say it is a deficient return, and then for that also this late fee will be coming. So what is the relief? What is the relief that they have given? If there is any deficiency in filing GSTR 9C from the year 2017-18 to 22-23, not for the current financial year, up to the previous financial year, it has to be filed on or before 31st March 2025. So I would say it is an opportunity to revisit whether you have filed this GSTR 9C or not. See, why this dispute comes? Because GSTR 9C, the limit is 5 crores. Sometimes in GSTR 3B, your sale of asset will be coming. That will get included in the aggregate turnover definition. But your P&L will not indicate your turnover as 5 crores. But this is based on your aggregate turnover. So you will be liable for GSTR 9C. So ascertain whether your aggregate turnover is more than 5 crores, then you file 9C. GST definition is going to be amended. Yes, this is one of the area. So there is a definition for input service distributor. First, ISD was mandatory or it is optional. Government first clarified, yes, it is an optional. They can do that through cross-charge mechanism. That was given in a circular. But after that, even the law was amended to make the ISD mandatory. So if at all there is a credit to be distributed to various units for which a common invoice is received, you have to go in for a ISD mechanism only. You cannot do it through cross-charge. You have to do only through the ISD mechanism. Okay. Suppose there is a rented premises head office. Say you are paying a monthly 10 lakhs, and then this head office is used for the various branches at various locations having a distinct GST registration number. The rent has to be apportioned because they will be using. So there should be ISD registration. From there only this distribution has to take place. Only the HO cannot take the credit. So this is one of the issue that has been amended. So ISD is a mandatory requirement. But now this ISD mechanism fails. ISD mechanism or RC mechanism fails. Though the definition I have highlighted, including invoices in respect of services liable to tax under section 9.3 or 9.4, that is from notified services or from unregistered persons, then you have to pay GST and then you have to go in for ISD only. So this is a simple implication. But sometimes this RCM fails in case of an interstate supply. So I have taken an illustration. AMW Limited has got an office in New Delhi. Okay. The purpose of this office is to keep liaising with the government of offices in New Delhi. Okay. They do not do any outward supply of goods or services. So there is no need for taking the registration because no supply is made from there. It is here for liaising purpose only. But the rent is paid to an unregistered person. Rent is paid from Coimbatore to the landlord at Delhi. Now the question arises, should the RCM may be paid? Here there is a gap. It cannot be paid because you will be aware of the fact the place of supply in case of immovable property is the place where the property is located. So in this case, the place of supply is New Delhi. So the service provider is also located. So it will be intrastate supply. For that you have to pay CGST and then SGST. But you do not have a registration at New Delhi. So how to pay the tax under the state tax and CGST? So the consultants are of the opinion, in that situation, there is no need for payment of the RCM at all. So that was the view taken. So Google listens. Just like that, government is also listening to whatever the internal discussion we consultants are doing. So in one of the forum, this was a very long discussion. Now government has heard. So now they proposed the amendment. So they propose interstate RCM transaction ISD. So whenever there is going to be such a situation, that also will be covered under this ISD mechanism. So this is a proposed amendment that is going to come. So temporary identification number. Many times our vehicles are intercepted at other places and then we are made to make the payment there. So for that, a temporary registration is allotted by the officials who are intercepting the vehicle and then imposing the penalty. 200% of the tax is the penalty they levy, and then we are asked to pay the tax there. But for that, we have to take a temporary registration. Now that officer himself, they take the give the temporary registration and then ask us to pay the tax there. Now, after that, we file an appeal using this temporary registration. But for this purpose, there is no legal backing. So how to give a temporary registration, whether an application is required, what type of information required, all those things are not required. For a regular registration, you will be aware of the fact so many checks and balances are required. Now they are going to use the artificial intelligence. If a person is found to be a risky person, then he has to go to the GST Seva Kendra, present himself. Now they are going to give a time slot for this purpose. All these things have been given. But for temporary registration, without anything, they will allot the registration and then they will ask for the payment. Because money is going to give, and that time there is no need for anything. So this situation, they are going to change. Now for allotment of the temporary registration, they are going to prescribe a separate rule and then procedure for the same. IMS, legal backing for IMS. I used to tell, okay, adjudication officer is there, Appeal Commissioner is this, Tribunal is there, then Ministry of Finance is there, Finance Minister is there, GST Council is there. But of all, who is the authority? GST is the authority. நான் சொல்றதான் சட்டம் அப்படிங்கிறது GST authority. So they do many things. Okay, after that the amendments will come. Okay, சொல்லுவாங்கல்ல, யானை வரும் பின்னே மணி ஓசை வரும் முன்னே. இதை வந்து மாத்தி சொல்லியிருப்பாங்க ஒரு சிலர். அது வந்து எது கரெக்ட் அப்படிங்கிறதெல்லாம் தெரியாது. ஒருவேளை வந்து அந்த மாத்தி சொன்னதுதான் கரெக்டா இருக்குமோ அப்படிங்கிறதா வந்துட்டு இந்த ஐஎம்எஸ் பொறுத்த வரைக்கும் தெரியுது. ஏன் அப்படின்னு கேட்டோம்னா, they give an advisory, then after that government wakes up and then it decides to give a implementation or legal status. So first one is they are going to amend section 38. So section 38 is connected with GSTR 2B. So even in the initial stages, GSTR 2B did not have any legal backing. GSTR 2B did not have legal backing. After that only they amended section 38. Okay. Now this IMS is coming in between the GSTR 2B and then GSTR 2B. So they are going to give a backing for IMS by amending section 38 also. Then 34(2), a reversal of ITC attributable to the credit note. See, whenever that was the issue, that was an issue, ITC should have been one of the condition for discount. So one of the condition for discount is that ITC should have been reversed by the recipient. So the question, how will I know that person has reversed the ITC or not? So that was the very lacuna. For that they give a circular. So just like the ITC which is not populated, get the certificate from the taxable person or get the certificate from a chartered accountant. So that was the circular given. Just like that, for this reversal of the ITC also, they told till such mechanism is implemented, that circular, that letter or the certificate can be used. That was the circular. Now they are giving mandating that the amendment 34(2) specifically that requirement of reversal of ITC. See, whenever there is a credit note issued, that recipient has to reverse. Now also some of the person who are filing this GSTR 2B and then IMS, they told me, I have not seen practically, they told, see, they have given a credit note. They have given a credit note and then they have loaded it in GSTR 1, but the person has rejected that credit note. Usually the credit note is not liable for rejection, but this assessee told, as soon as he rejected, his output tax liability got inflated. So that is, we have to see the practically, but now they are providing that section 34(2) will be amended in such a way the recipient has to reduce his ITC, for the credit note received by him. So how the credit note has to be adjusted. They are going to provide a new rule for that. And then they are going to amend section 39. Everything is going to be amended for the purpose of IMS only. Invoice management system is going to be the future, and we feel that government will make a bulk uploading of the IMS in the portal directly by us. And then in addition to that, there are some more amendments with regard to the hotel industry. See, I did not deal with those things specifically because it related to only that industry. What I took is only for general applicability. Hotel industry, one of the issue is if the hotel charges more than 7,500, then rate of tax should change to 18%. Suppose in Ooty and all, during the season, they may charge 10,000, but on all the other dates, it will be 5,000 only. So that was an issue. Immediately, if the department audit finds out it is more than 7,500, they will say, even for the previous entire year, you pay at the 18%. Because once you cross 7,500, it act or the rules does not say after that only you will be eligible for, you have to be liable for 18%. So if at all a hotel is attached to a hotel which is charging more than 7,500, they have to revise the food cost or the GST levied on food to 18%. So for them also problem arose. Now for that a welcome amendment has done. So this 7,500, it will be depending on the amount charged in the previous year. Suppose during the 23-24, one day or 1 week you are charging more than 7,500. From 24-25, you have to pay at the rate of 18%. So that is the amendment. So for the previous year, they cannot amend. In the middle of the year also, if it is going to be charged for the earlier period also, they will not ask. So these are all some of the clarification. Then another issue is with regard to some procedure they are going to make for evasion prone commodities. Evasion prone commodities may be with regard to pan masala, gutka, or everything. They will be calling it as a evasion prone commodities. For that, they are going to prescribe some marks on them, or like that they are going to prescribe. So these are all some of the changes that are been proposed. That is, I have not covered the entire changes. Some changes covered, and then it will be supplemented by Aravind Tangam. It is now over to Aravind.
So everyone, a very good evening. So it has been a very detailed deliberation on the key amendments made in the 55th GST Council meeting. So to just add on a couple of points. So with respect to sponsorship services, the service was always taxable under reverse charge mechanism. Now, going forward, there would be a situation where if the provider of sponsorship service is a body corporate, then the tax would be paid by the body corporate under forward charge mechanism. Only when he is not a body corporate, then the recipient of service would be liable to pay the tax under reverse charge mechanism. So that would be one aspect relating to sponsorship services that may be applicable for some selected category of corporates. There has been one specific amendment relating to the special economic zone and free trade warehousing, FTWZ, free trade warehousing zones. So whenever there are goods that are warehoused in an SEZ or in an FTWZ, right, that is before the clearance for exports to a DTA, that shall also be treated neither as a supply of goods nor a supply of services. So whether it will be an export or what is going to be the transaction when it is moved from an SEZ to an SEZ was a gray area. This is to be in line. They want to make sure that whenever the transaction is with a customs bonded warehouse, the similar transaction, the similar situation is given with respect to an SEZ and an FTWZ. So that is as such one situation. So with respect to vouchers, there has a set of amendments which are proposed to be made. There are sections which are proposed to be removed. There are some clarifications, circulars to be issued. So definitely there is going to be very substantial change in the understanding of the taxability of vouchers. vouchers to say for example, during Christmas, say someone is giving you a gift. Instead of a gift directly as a product or as goods, they are giving you a voucher which you can use it in any specific store for buying a specific product or for buying any product. So those are generally called as vouchers, and these vouchers, the taxability of which is going to be undertaking a substantial change through this recommendations made in the 55th GST Council meeting. So that is also one of the important aspect of things that is getting changed. So predominantly all the other important aspects have been well covered by our senior partner CAP Paul Thangam, and therefore I think this is all about the key highlights of the 55th GST Council meeting. So we should definitely await the official notifications, the circulars, the amendments to the Act, and thereupon notification of such amendments through a notification only when lot of things will come into actual effect. But then it is extremely very important that we know what are the upcoming changes, and in this regard, we wanted to be first to highlight you about these changes in detail. So thank each one of you for your active participation throughout our webinars for the last 52 weeks, and this being the 53rd week. We look forward to your active participation in all our upcoming webinars. You can follow us in our WhatsApp channel, the link of which is there given in the Q&A box and the chat box as well. You can follow us on our WhatsApp channel and on our YouTube page to get back on these videos of the webinars, or also to get real-time updates on the latest changes in GST. We thank each one of you for your active participation. Thank you one and all. Thank you.